Good morning, everybody. Phone died, so that is why. That is why we have to switch to the phone. Unfortunately, it's just not working. I don't know why. I know why. The laptop is basically broken, but I still tried to prevail into it. Anyway, we were speaking here on DXY. DXY here, we created these equal lows. We also had this fair value gap. Excuse me, that we've got as a target, which is our first target that we've set. And you can also see that there's liquidity at the base or the lower bound of the fair value gap right here. So if we change this to a green line for liquidity, and we have these equal lows here. So I do think what will happen is that if we are bearish, which we're not exactly yet, we've had a market structure break, not a market structure shift. The difference is the shift is a confirmation that market is moving in the direction. A shift is just that price broke some structure. The structure that you break is slightly different, where it differentiates the two. For example, here we broke this low, and you could also say we created equal highs. So if we make this line white right here, and then how do we copy this? Okay, so let me just hover over this line instead because I don't know how to control it. So this low here is what we broke, which is a swing low. And we also created almost equal highs. We failed to create a high high. So with those two facts, we have a market structure break. The market structure shift would be that we close, create a high, and confirm this low with a lower low by taking out a larger term or longer time frame swing low. At that point, then we have a market structure break because we get a confirmation. It's not just a wick out, it's not a liquidity grab, and it's also confirmed on a higher time frame. So when you have these assimilation of things, it then increases the chances of being a market structure shift. So my point is that we have opportunity for price to reverse. Now, excuse me, it could either come back up into this area here and then continue down, taking out these equal lows, or price could simply just return and go up and take out this high before it comes back down again. So price can do anything, but what would you notice is that we have an agreement that price comes here first because the fair value gap is an imbalance. Price likes to rebalance price. When you have common fair value gaps, price tends to revalue or offer itself quite quickly. So generally speaking, we should expect to see that. We also had a big move which would need a correction, and that would make this week bullish. So that's why we'll probably be bullish up until this point. So if we take that bias into an actual currency, because that was just DXY, which is the dollar against a unity or a combination of what would you call those, of instruments or currencies. It's the dollar against a pool of currencies, such as the GBP, the euro, the Australian dollars. It's a combination of how the dollar is doing against everything as a whole. So if we look at weekly time frame, I kind of have this structure in my head. So we have bearishness in the short term, in that we created a low here, created a high, created a low, all the way down here, this 1, 1, 3, 2, 4, 6 level, which is that white line at the bottom. Sorry. Excuse me. And we've come up to now at this order block. It's order block on a weekly time frame because it has a fair value gap following it. It then also has a reaction so far. So the weekly arrears so far is that we've come up and we are coming back down. So let's look at what we came up to, because we came up, but for what reason? What did we take out? It was a certain type of high. Was it a key level? Why did we come up? What did we come up for? Try and move this down first. So we came up to just below the weekly fair value gap, which is, this is the 4 hourly. You can also see there's a 4 hour fair value gap here. And if we were to drag this across, you can see we came up to this fair value gap. So on the 4 hour time frame, we're actually still bullish despite us reaching the fair value gap and retracing a little bit, because structure is still intact. We can see that we're still creating these high highs and high lows. So this low move could just simply be that price is moving to the downside from the perspective of a rejection rather than a retrace, rather than a retracement rather than a full-on rejection. Therefore, we can't just assume that we're bearish. We also have Monday creating some highs and lows. I do want to see, I don't know if I can get the indicator for it. There's an indicator for sessions. Oh wait, I already had it. I can't see it. Oh, I need to be on a small time frame. Here we go. So we have at this excuse me, 115368 level, just a bit below that, we have the New York liquidity making a high with London's high. So London's high and New York's high are intact, they were the same. And when we came up here, we took out New York. Asia then created its own range. New York came up into Asia. Sorry, London came up into Asia, then went down dramatically, and is again consolidated. So we went through this on Euro USD on, I think, the week of 15th of July, that whole week, in back testing to see how price reacted or what price did to come out of a consolidation. So if we make this orange, I need to rechange this color scheme, I don't like it. So you can see here we're consolidating in this range. Above we have Asia highs and London highs now, which are equal, and London lows liquidity and Asia lows liquidity also at a low, and there's also New York. So there's 3 sessions within this orange box. What tends to happen is that we sweep both sides. So essentially what I would be waiting for in this instance is for price to sweep the Asia highs and Asia lows if I believe it's going to go up, or I'll just expect to see the inverse of that if I expect to go up. I mean down, sorry. So take out the sell side, take out buy side, and then move down. So I basically, essentially what I would do is I will set an alert above this zone. So 1.1516. So if we get an alert set here, hello. Okay, it's not working there, so I'm just gonna have to do it like this. Don't know why my alerts are not working. Me clear. Old ones. Once again. Okay, let me close and open. Also, sorry, I don't have access to the chat, so apologies about that if anybody's talking I cannot see. Oh, Lilia says hi. Sorry I wasn't able to see you in time. I'm kind of streaming off my phone, so it's a very unfortunate setup. Okay, so let me add a alert here. Okay, it's working now. So we're going to alert set on that line there, and then we want to set an alert just here as well. Perfect, Monto. So essentially what we're doing, you can see there's a consolidation here. It's better to see on the 30-minute time frame. You can see we're consolidating this range. We've got Asia highs, London highs, all in the equilibrium at this 115,172 level, and then at the bottom we have a 14994 level. So I'm expecting price to sweep one side and then head in the opposite direction. Now if you look at our bias, we're bullish. We're bullish on the dollar. So we'd actually expect the lows to get taken first. When the lows get taken, expect to move to the upside. You wouldn't always expect to move in the opposite direction of where you're trying to go. And then we could then potentially see price then displace downwards. I think this will be one of those types of weeks where price delivers later on in the week because of the fact we had a slow start, with Monday being a bank holiday. And then we had Tuesday, which is today. I don't see much movement. It looks like it's consolidating. I haven't checked other pairs, to be fair. Maybe let's have a look at GU. After I check GU, we'll end stream. Where's GBP USD? Quickly check on the chat. Cool. So GU, similar things. The only thing is that it's ahead in that in this consolidation over here, it's already broken up towards the highs in terms of it's taken out Asia lows. So Asia highs, sorry. So this, however, could go up further and then drop even further down. And I'm actually seeing that this range it could be respecting is the New York range, which would mean that it comes up to this optimal trade entry. This is the 30-minute. This is the hourly. 2 hourly. Go to a smaller time frame. Okay, so it's a bullish run over here. So I think it can come up to around about optimal trade entry here. And the only thing I would look for is the bias. So if we look at the weekly, it looks very messy. Let me go to the daily. Again, I don't see much clear structure. If I'm reading price action, we created a swing high. We failed to create a high here. This had a low that we broke. So I would say, if I had to say anything, it would be bearish. So it coming up is good for sales, in that it's coming up to this area. And this zone I drew is this actually tightened a bit more. It's the order block. You can make it 2 hours, what's it like on a 4-hour time frame? Okay, on the 4-hour time frame, we have this high and this low. So this is the range here, which is an order block. You go back twice. Bam, bam. Take the middle one. Color, color, color. Red. Cool. So we could expect price to come up to this ultimate trade entry and then continue down. Again, this is based on a bearish bias on the dollar. Bullish bias on the dollar, which would be bearish for GU. Look at the structure. It says that we've been bearish for a while. Obviously, price went up. There's context to our bearishness. Credit swing high. This also would look like a heads and shoulders, so retail would actually be buying this. And we have all institutional order flow at the optimal trade entry of the New York range. So that's New York range from yesterday, which was actually we actually kind of still more movement yesterday than today. So that would be my anticipation. I would obviously set another alert. We only get 3 alerts. So I want to see when price enters this optimal trade entry range. So that is at 1345, which is the number that they would use. So 1345, let's create the alert. Maybe it's 11345. Hold on. No, that's correct. Perfect. So that is going to be our 2 setups for the day. We're looking at EU and GU. I would analyze more, but I don't have my laptop's not working. So these are the 2 pairs I'm going to be looking at, and everything else I'm going to ignore. It's just essentially a sell option or opportunity on both. EU is a bit more complicated. I'm expecting it to sweep the lows and then the highs. Then I would enter a sell. GU looks a bit more advanced. It's already taken out Asia highs, taken out that liquidity. So I'm expecting it to come up a little bit and then come back down afterwards. We'll see. Again, just because that's what we're expecting doesn't mean that's what will happen. But it is, again, good to always be prepared. So I'm going to start getting ready. I need to go soon. So I will be live tomorrow. Hopefully my laptop would have been sorted by then. I'm going to charge it overnight and I will stream first thing in the morning, which would allow me to, if my battery is still going to mess up, I at least get something done. So that's it from me. I will catch you guys tomorrow and appreciate everybody for tuning in. It's been your boy CJ, and I'll see you guys tomorrow. Peace.